Well, DB Corp is on our radar after the company's radio division, MyFM, had increased its rates by around 15%. Remember, the company also had reported a weak operational performance in the second quarter. But what's the way ahead, and what does the radio business in particular have to deliver in the second half of the year? We're joined by Mr. Pawan Agarwal, the Deputy Managing Director of DB Corp. Thanks so much, Mr. Agarwal, for joining us here on CNBC Tv18. Give us a couple of details for the year. What kind of a revenue are you looking at from the radio business? In the last quarter, you did something like 35 crores for the quarter. So for the year, what should the revenues look like? And with this, price increase, that will help the top line, isn't it? How much will it contribute?
Sure. So quarter two did about 37.5 crores of revenue, and H1 did roughly about 70 crores. H1 grew by about 5%, but more importantly, quarter two had an 8% growth, with bulk of the season for Navratra and Diwali falling into Q3. So Q3 is surely going to look better than Q2 compared to.
So for the year, we assume around 140 crores?
For the year, so about 70 crores now. Usually H1 is lower than H2, so the year will be higher than 140 crores.
And over and above that, there will be a 15% ad rate hike, right?
Yes. So now what we're doing on the ad rate hike is basically our inventories have been peaked out in all our key markets. So we are trying to now lower our inventory and increase our price so that overall we stay on a double-digit growth, including because we don't have space for volume.
So ad revenue growth for radio will be double-digit.
Yes, we had a good quarter two. So quarter three is looking better than quarter two.
Would you look to increase your ad rates for the other businesses, print maybe?
Not for print, because print doesn't have inventory issues. Radio typically has a peaked out inventory issue, so radio has to aggressively look for price increase and also improve the experience. Print can always increase pages and deliver the similar experience. Radio cannot.
Mr. Agarwal, we're coming off a festive season. If you could tell us on a like-to-like basis, what was the growth in this festive season?
This festive season, I won't be able to give you an exact number, but we had a good growth. Yeah, we've had a good double-digit, very good double-digit growth in the festive season in radio in the last month and a half, and we're keeping our fingers crossed.
And we're talking about that on a like-to-like basis. It's a double-digit growth.
Yeah.
Okay. Your radio margins were about 23.7% in Q2.
Mm-hmm. Yes.
What would it look like for the second half of the year, given the ad rate hike?
So margin should stay in the range of 28-29% for the rest of the year.
Okay. And blended, what would the margins be? Because printing business, the margins have been under pressure. So the last quarter you have done around 16% approximately. That's in quarter two. For the second half of the year, what kind of a blended margin are we looking at?
So we don't give guidance for coming quarters, but
will the second half of the year be better than the first half of the year in terms of margins?
Let's hope so. It all depends on the top line now for the remaining quarters, how the margins start improving. And we're definitely working to see that cost. So there is an indication that the cost should improve in quarter four, the newsprint price. Let's see.
Okay. You said for radio we should see double-digit ad revenue growth, at least in the second half of the year. Would you say the same for print as well?
I can't say that right now. For print, radio, because you asked me about the festive. The festive has done a double-digit, and we are hoping that the quarter can continue to close on that double-digit growth.
Okay. Usually ahead of the election season, even spending in print goes up, right, by government?
Mm-hmm. Yes. So what happens is, the combined effect of the election and the reduced spend of government leads to, this, government business loss leads to not huge impact on the revenues. So let's see. We still have time this month on the election spends.
Okay, quick question on the radio business. How are the legacy stations? What's the utilization levels out there?
So legacy stations are all sitting at about 15 to 20 minutes of ad inventory per hour, which is optimum. They can't go beyond this. And the new stations are all under 10 minutes.
The last time we spoke to you, you were also grappling with higher newsprint costs, newsprint prices. How has it been for the last 2 months?
So we are seeing some indications of price correction, about $30 to $40 for Q4. So we haven't done deals, but we've got indications of newsprint softening.
Okay. All right. We'll leave it to that. Thanks, Pawan, for joining in. So that is DB Corp. The festive season has been pretty good, at least for the radio side of the business. We'll slip into a break on that note with the news that it's still down about 0.3-0.4% for the benchmark indices. On the other side, Ashwini Gujral, Rajat Bose will join in with their trading strategy. Stay tuned.